Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne, man with David Ingles.
Let's get to your top stories today. China's powerful Politburo pledging to make boosting consumer spending a greater focus of policy in this battle to kickstart growth. Now on to markets. Tech share is very much in focus after a sell-off on Wall Street fueled by worries over AI. In Japan, though, when you look at stocks there, bonds also are down ahead of the crucial BOJ policy decision.
And I'm Sherry in Tokyo, where Bank of Japan officials are reportedly discussing a possible rate hike today. Investors also are awaiting details of plans to reduce bond buying.
I think Dave and my heads are about to explode, just given all the things that are happening here today as well. So certainly bear with us as we get through all of this what's happened here today. Yes, we talk about it's BOJ Day, it's Fed Day, of course, that's the big ones. And then we got the U.S. earnings in the after hours. Microsoft, you saw there with a bit of a dip in those shares. And certainly that's really going to lead to that sentiment that we're seeing. Basically, U.S. tech was down, rotation into that value trade that really continued on. And you take a look at NASDAQ 100 futures, at least now are recovering after we've been on the cusp of a correction for some time now. The dollar is a little bit flat leading up to that Fed decision, but we're watching dollar yen very closely, continuing to see that strength. In fact, we're thinking and we're looking like we're going to be heading to one of the best monthly gains that we've seen since 2022 for the yen. Bonds were a bit up. We're slightly seeing a bit of reversal here today. Obviously, what we've been hearing from the BOJ, or at least from reports of what the BOJ could do, is really moving the JGB market right now. You see that in the 2-year. And we're watching, of course, very closely that bid into gold as well. That continues just slightly here this morning, obviously after those Israel attacks in Beirut. Oil also a little bit more elevated here this morning. But it really is about not just the central bank story, but the earnings story, right? So what we talked about Microsoft, perhaps when it comes to the capex numbers, that was what may have pleased investors, but it really was the slowdown in the cloud that really underwhelmed, right? So what does this mean for Asia? Big tech stocks, we're talking about the likes of TSMC, Pegatron, also a supplier of Microsoft as well. Those are both falling at the early get-goes of the Taiwan session. Samsung, pretty good earnings though, right? They're talking about profits surging some 6-fold after that recovery in chips here. So really boosted by the rise in memory prices, robust demand when it comes to those HBMs as well. So the stock about 0.75%. And we're watching very closely China, right? So obviously, we got that Politburo meeting, the statement that came out. Most of the analysts were saying, it was a bit underwhelming, didn't really get anything new out of all this, and it really kind of failed to lift stocks or yields really yesterday. You look at that Chinese 10-year yield at 2.13 now. I believe that's another new record low. I love the headline on the Bloomberg News. It's a bond mania with a showdown between markets and the PBOC. They're daring the PBOC to move here. 723 for the currency futures are slightly positive this morning, Dave.
Yeah, well, don't fight the Fed, don't punch the PBOC. Get that in a T-shirt right now. ING, of course, out with that no 2% there. So, yeah, it's a couple of things, right? Yvonne mentioned earnings as well. This drawdown we're seeing across equity markets. Might not get to that today, but we are on correction watch for many of the major benchmarks on your screens with that distance to those specific levels. We have pulled back, though, as far as the NASDAQ futures are concerned from the edge ever so slightly. So NVIDIA overnight was down 6. I think we're up 5% in your pre-markets. And Microsoft will get to that story a bit later on, the details that Yvonne was pointing out. To flip the page, please, if we can. We were down almost 6%, I believe, in the after hours, so we're down about 2%. Last I checked. And as far as bear market is concerned, this chip story, right, we're about 3.5% on the SOX index from entering a bear market. Hang Seng Tech index is about 3%. So watch it very closely. Going into the session today, so we mentioned correction watch, onshore, CSI 300, Shanghai Composite. Simultaneously, though, I should mention that as we approach those levels, we are also entering oversold conditions. So we might get a pickup as far as the technical bounce is concerned. More on the sectors to watch later on, intervention watch on CGBs. And, of course, the BOJ goes into key crosses. And, oh, by the way, we haven't even talked about PMI data comes out also later today. Okay, so we are 4 minutes into the show. Let's get to it, shall we?
Let's bring in our team. Asia Trade co-anchor Sherry An joining us from Tokyo ahead of the BOJ decision. We also have China correspondent Min Lo on that Politburo meeting. And from San Francisco, we have Bloomberg senior executive editor for technology, Dom Giles. Sherry, I'll start with you. What are the chances the BOJ can move today?
Coming into this meeting, we were expecting the consensus call that was by economist survey by Bloomberg saying that we're not going to see a change when it comes to the interest rate. But then overnight, we got local media reports now saying the board members are discussing a rate hike to 0.25%. So could that be the BOJ really priming markets to be ready for a potential rate hike? Today is the big question. Already Bloomberg Economics was expecting a hike in today's meeting to that range of 0.15% to 0.25%. Some of the reasoning behind that could be that potentially the yen is stronger. And you would think, doesn't the Bank of Japan want to hike rates when the yen is weak? Well, they don't want to be seen as being beholden by the currency. So potentially this could be a good excuse to just move. Also, the fact that we have seen the BOJ scrapping negative rates back in March, the first hike in 17 years happened when we had already seen declining demand in the fourth quarter. So the BOJ seems to be very much focused on inflation dynamics more than growth outlook expectations, given that we have seen a little bit of weakness when it comes to household spending and consumption.
You know, that very last sentence, Min, that Sherry mentioned, weak household consumption, we can apply that to China and the growth outlook. The Politburo, of course, meeting was yesterday. Key takeaways there.
Yeah, I think what really stood out to me is this big focus on boosting domestic consumption. I think they gave it a lot more prominence than was expected. But again, the question is what kind of policy measures will be implemented and how effective that will be, because the readout was a little sketchy on details. I think a big part of boosting consumption is going to come from that expansion of the existing equipment renewal program that has already been sketched out, the government earmarking 300 billion yuan in that ultra-long special government bonds. But the readout did mention boosting service consumption, for instance. Does that mean there will be more consumption vouchers or subsidies? That's not very clear. And the other thing that stood out to me was what was missing from the readout, which is any sort of language to support, to provide more support for the property sector. Instead, the readout had reaffirmed the existing measures of trying to complete those uncompleted homes, to turn the excess housing into affordable housing. So the concern is really that without a decisive upturn in the property sector, then it's going to be very hard to lift consumer sentiment as well.
It didn't really lift market sentiment either. You know, it just seems like it wasn't really enough, or even more than what we were expecting from the third plan.
Yeah, exactly. If you look at the language around fiscal and monetary policy, the language is pretty similar to what we've heard before: proactive fiscal policy, prudent monetary policy. And I think it's clear that the second half of the economy, the growth will come from more infrastructure spending. The government urging the speeding of the issuance of the local government bonds. So far, they have allocated 3.8 trillion yuan this year, but 2.1 trillion yuan have not been issued yet. And I think I want to talk about the new productive forces as well. There was a bit of space dedicated to that in the readout. So the government's still hanging on to that long-term priority, and there will be short-term gains as the economy restructure. And also, we know a big part of, a big problem with the economy is that capacity is growing too quickly. And so the readout had mentioned the need to eliminate this sort of unhealthy competition and the inefficient capacities in the economy now.
All right, Min, thank you. Our China correspondent, Min Lo there. I want to bring in Tom Giles now, our senior executive editor for tech, joining us out of San Francisco on the back of those Microsoft earnings. It seems like, Tom, there was a bit of disappointment on Azure, the cloud growth that did slow down a bit.
That's right. Big day for tech earnings and a big day for disappointments if you're a Microsoft investor. They were looking at that all-important cloud number. Azure is the business where they sell cloud computing to their big clients around the world. And the growth there slowed. Most companies would kill for a 29% growth, but when you compare it to previous quarter, 31% growth, there was disappointment. The stock came down pretty considerably in late trading here in the U.S., but then it started to pare its gains. And I think that happened as Amy Hood, the CFO of Microsoft, got on a conference call and talked about the idea of Azure growth coming back and accelerating in the second part of the year, early fiscal 2025. So there was a little bit of relief there. It wasn't all gloom and doom. And remember, this is just another reminder of how important it is that these companies that have been talking a big game in artificial intelligence, spending billions of dollars, investing in other companies, LLMs, and investing in their data centers, they need to have a return on that investment. And so there was just disappointment that we're not seeing it accelerate.
Tom, speaking of, we also did hear from AMD. Just get us up to speed on what the company said.
As far as AMD's results, the focus for AMD is just how they're doing. They have released a new accelerator that is meant to rival NVIDIA's. They are seeing upside there, and they're starting to see demand for that chip, and it's basically customers are looking for alternatives to NVIDIA, which is for many people the only show in town when it comes to those all-important accelerators that will drive the AI revolution. NVIDIA's way out there ahead as the leader, and so people are looking for any signs that there will be an alternative to that. AMD is just starting to show the early signs of that.
There was a scoop from your team from Intel about cutting jobs. I mean, how big of a surprise was that?
Yeah, well, I mean, Intel at one point, the crown jewel in the U.S. chip making constellation, and what you've seen is they have lost ground in recent years to competitors. They've lost market share in the core business. They have not been as technologically advanced as some of their competitors, including TSMC, for example, right there in Taiwan in your backyard. And what they're doing is they're making big investments in new technology, improving their technology so they can catch up in the most advanced chips. They're also coping with unpredictable demands in their core business. What that's requiring is more spending and reducing of costs, and that's where those headcount reductions are going to come. We think it's going to be announced later on this week. They report on Thursday, and we'll be watching those numbers very, very closely. We'll be looking for how many people will be losing their jobs and just how much Pat Gelsinger, CEO of Intel, needs to realign that business to cope with the new reality.
Tom Giles there, of course, with the Intel. On Intel, fantastic reporting out of the team there. Tom Giles in San Francisco for us, our executive editor for technology. You should mention, of course, after the drawdown we had overnight in Texas, we are seeing that pare back a little bit right now, some recovery in the after-hours session. Right, coming up ahead here on the show, we'll have more analysis on the upcoming BOJ decision with the chief Japan economist at Barclays, and also in the next hour, we'll be talking equity markets on the BOJ and Japan story. We'll be joined by Sparx Asset Management.
But first, we're speaking with Helen Properties Chair Adriel after the real estate company's profit tumbled, triggering its worst share sell-off since 1997. We're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show.
Welcome back. You're watching the China Show. Just under 15 minutes to the opening bell. Also, PMI numbers are set to come through. This is for July, and also we'll be unpacking, of course, the Politburo and the key takeaways there with Bank of America. In the meantime, though, the midpoint of the day is out, 713.46, and as you can see, of course, we've seen some strength coming through in the Chinese currency, maybe alongside hand in hand with the Japanese currency. Last 5 days has been nothing short of exceptional, really, when you look at some of these crosses there.
Yep. And everyone's thinking how much more gains could we see in that yen and how much could it actually lift this renminbi. Certainly that's one we're watching out for. Also looking out for Hang Lung shares after what we saw, one of the biggest tumbles since 1997 on Tuesday here in Hong Kong after the firm cut its dividend by a third. Morgan Stanley today downgrading the stock to equal weight, citing weaker fundamentals and really on just the overall earnings outlook. Let's bring in Adriel, chair of Hang Lung Group and Hang Lung Properties. It's a turbulent time, as you say, to be joining in as the chair. This is your first earnings report, I believe, since taking over, Adriel. But why cut the dividend?
So this is really a reaction to the performance. You'll notice that our underlying profit has been down about 22%, while our revenues are still sort of stable. This year we had some property sales, but really what we look at on a regular basis is the mainland China recurring underlying rental property profit, and that is what is really down. The macro environment is really tough. There's a lot of uncertainty. There's a lot of question marks around the Chinese consumer, and so this is really a reaction to all of that.
Do you see this persisting, the weakness in China, as a way against? Do you have a road back to as far as the dividend is concerned? It's the second part of the question.
Look, nobody ever wants to cut the dividend. If I didn't have to cut it, I wouldn't have. Yeah. But I think the interest rates are still high. There's a lot of uncertainty around the Chinese consumer. We talk to the brands a lot, and the brands are still a little bit uncertain. Last year they were talking about maybe growth in second half this year. Now they're talking about fourth quarter. Some brands are saying maybe next year, and so there's a lot of uncertainty, and this is really a reaction to that.
Not just when it comes to the retail side. I mean, in terms of some of the sales progress of some of your service departments in China was quite weak as well. I think you only sold 6 units in the first half. Would you consider cutting prices in the second half?
Look, these days you have to do whatever will make the inventory move. So if that's what it takes, then that's definitely on the table. That being said, we are a premium product, and so we don't want to cut too much. But that has been slow, especially since we're selling service departments rather than residential, which is slightly different in the market size.
Do you think the markets are overreacted? I mean, you and I bumped into each other before you walked in here, and it was quite a day yesterday.
I would like to say that they have. If you look at our dividend yield, it's still very, very healthy.
Right.
If I'm not mistaken, we should be around 9% right now. So that's still a little bit on the high side.
Even with a stock drop.
Exactly, even with the stock drop.
Thanks to the stock drop.
Well, prior to the stock drop, we were trading at around 12% dividend yield.
Okay.
And that's just way too high if you compare us to our peers. I think we're still a relatively high quality name. We have strong management, we have a strong pipeline, we have a strong operation in China. And so, I think that it's been a little bit oversold, I'd like to say. Definitely, I will be looking into getting into the market myself because of these prices.
You mentioned about the uncertainty around the Chinese consumer. Are you really seeing clear trends now of wealthy Chinese heading overseas to shop versus at home?
Oh, the yen, the weakness of the yen was a huge factor in the last half. There's so much travel to Japan, although the numbers are only 66% of pre-COVID, so there's a 34% drop in number of Chinese travelers to Japan pre-COVID. The spending per capita is up by 50%, so they're buying up all the luxury bags and all the luxury products in Japan because they were about 30% cheaper. And so that really had a big hit. The biggest drop for our portfolio was in Shanghai. And Shanghai is, as you know, a very sophisticated customer, but it's also the wealthiest customer. So when they travel, then that really hit us.
Right. How are you planning the business around Shanghai, for Plaza 66, for example? Yeah. And what's occupancy right, for example? Where do you see leases going, given the weakness?
So actually, one of the bright points is that our occupancy is still very, very high, both in offices and in retail.
Okay.
We're close, basically 100%. Our fixed rents are still very high, and in fact, we've raised those. Although the variable rents, which we collect based on sales, have come down a little bit. So in Shanghai, we also have another project where we're expanding a little bit, and we're full speed ahead. Just because we've seen a little bit of a drop would not cause us to slow that down at all.
Can we talk about Hong Kong as well? I mean, you're starting to see some of your profit margins there shrink quite a bit here, and of course, obviously there's been a lot of turbulence and a downturn in this property market. What's the outlook for Hong Kong?
Hong Kong, everybody's talking about customers going up to Shenzhen. Given that, if you look at our top line numbers, we're about down 7%, but that's really a result of signing a few new leases, renewals, at a much lower rate than we had originally signed them. But if you look at the consumption, it's actually only down low single digits. So for us, Hong Kong has been relatively stable. Obviously, I don't want to see it down. I'd rather see it up. But, it's not as weak as I think people think it is.
Well, I mean, to your point, how are you looking at what some people would point to as structural changes in how the retail market works now in Hong Kong?
I think the structural change is absolutely going to be there. The question is, have we found that structural base? Because with more integration with GBA, Hong Kong people can travel more easily to the mainland and vice versa. But that also brings down sort of the lowest common denominator. So for rents or for pricing of certain goods and services, that's definitely going to be closer to what we see in Shenzhen.
We were just doing a story yesterday about, big families that are slashing prices of luxury homes in Hong Kong just to pay off debt in some ways, which really goes to show where the market is going. But are you just going to wait and see and wait for prices to rebound, or would you consider actually selling and cutting those prices as well?
So thankfully, although we have gearing, we're only at around 32, 33%. So we're not in a dangerous territory. It's something that I'm not especially comfortable with. I'd love to see that go down to, in the 20s. But that being said, if we continue to be where we are, which we expect to be for the next couple of years, that's not making me too uncomfortable. So we're not in any rush to sell anything.
Well, do you have a target, a timeline from 30+% to 20%? Do you want to get there at some point? By what year?
Well, I think we look at our own numbers. We should peak out in around 2026, so it's about 2 years from now.
Yep.
Depending on how things go, obviously there's a lot of moving factors, but we'd love to start moving that downwards starting from 2026 onwards.
And you talk about that competition between Hong Kong and Shenzhen in the retail side. How should we look at rental revenue now? I mean, are you looking that could actually drop further in Hong Kong in the second half?
We've dropped quite a lot in Hong Kong over the past several years. It's been a tough sort of 4 or 5 years. And so hopefully we found the bottom. Like I said, we haven't seen rentals dropping significantly. So I'd like to see those stabilize around where they are. That being said, if people do continue to go up to Shenzhen, and that's not just novelty, then we may have an opportunity to see them slip just a little bit more.
Right. So what is your base case projection on rents here?
My base case for Hong Kong is really that we'll stay where we are, close to where we are. And then in mainland China, we're still hoping for a little bit of growth towards the end of the year, but I don't think that'll be enough to pull the whole year numbers up.
Yeah. What do you think is still going to be the biggest risk for the rest of the year? Is it still higher rates? Is it still the uncertainty around the China story, you think?
Yeah, for us, I think it's still the higher rates. If rates come down a little bit, that definitely takes some pressure off of us.
Right. Now, ideally, obviously, you said you never want to cut a dividend. Do you see scope to bring back that dividend 6 months' time, or is that a tall order?
Look, I don't want to try to project 6 months out, but the idea is that we could do a reset in 2024.
Okay.
So this really brings things down a notch. It gives management some room to raise when business comes back, but it really depends on how businesses go.
Right. Well, then as far as the cash hoard is concerned, are you planning to just sit on cash for the moment? I mean, is the current weakness also affecting how you plan the business, I guess, as you look 2-3 years ahead is the question, too?
So one thing we've said in January, and actually we still believe today, is that if we have extra cash, the first thing we would do with it is to pay down our debt. The second would be to pay out dividends, and then only third would we be looking to reinvest in new projects.
Okay, so buybacks, that's off the table, for example?
Not for the time being.
Not the time. Okay, anything that doesn't worry you at the moment? So what is we spent the last couple of minutes going through the challenges right now. What doesn't worry you?
So I think actually people are a little bit too bearish on the Chinese consumer. If you look at LVMH's numbers, they're talking about how Chinese consumers, not in mainland China, but around the world, are actually still holding up. So they're doing the shopping elsewhere. They're doing the shopping in Japan. So overall, the numbers are still pretty good. That means that they still have money in the bank. They're still able to spend. I just need to make sure that I capture their spending in our malls in mainland China.
Adriel, fantastic speaking with you.
Yes.
Of course, let's do this again in a couple of months. Adriel Chan, there, of course, chair of the Hang Lung Group and also Hang Lung Properties. Going into the open today, what time is it? Okay, 5 minutes to the opening bell, and there we go. We're up slightly, 0.5% on the Hang Seng Index, and the Hang Seng China Index is at about 6,000 as we speak. So we were looking at. We have been on bear market watch on the Hang Seng Tech Index, which from the current level should be still about 3.5% away. So likely not happening today. And of course, we're going into the open today with PMI numbers in focus among the many, many, many things that we've fit into our rundowns today.
We thought that Politburo meeting was going to generate some sort of buzz, but I don't think it quite did. But it's really more the external picture, right? Whether it's the Feds, whether it's the BOJ, whether it's these U.S. tech earnings, that's really going to play out and drive sentiment here this morning. So certainly, it goes beyond that China story here today. But yes, you mentioned about that stronger renminbi, 723.48. That certainly is a stronger currency here this morning. And it's really been lifted what we talked about with the yen, right? When we're talking about 5% gains for the month, we haven't seen a movement to the upside for the yen like that in about 2 years or so. So, can this certainly last is one thing. You got to wonder if the BOJ does anything to deliver. If it doesn't, does the Fed have to do something, right? Because obviously with the Fed, it's about fully priced in that we might get a cut in September now in these markets. How clearly is the Fed going to send that signal is going to be a big question.
Yeah, according to BE, in fact, I'm glad you brought it up, because one sentence that was in the June statement on the Fed that they think should not be there when we get the new statement today is that we think The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving. So B thinks that goes away, but they think the proper signal will come at Jackson Hole and not the specific meeting. But who knows what the news gods could give us. The opening bell, 3 minutes away. This is the China Show.
Welcome back. You're watching the China Show. We're counting down the open of markets. It is busy. I'll tell you that. It's Fed, BOJ. Yeah. BOJ could happen any minute now, really, in the next few hours or so. So certainly markets are on watch here. The yen continues that strength here. And we're watching very closely what impact is going to have on the currency in China. Continuing that strength here today at 723. But really, when we got out of that Politburo meeting, didn't really quite move yields or move stocks that much after we heard that readout yesterday here as well. But right now, we're watching futures are still slightly to the positive side. Pre-market in Hang Seng is still positive. But again, we've got to watch that PMI number coming out in just a few seconds.
Yeah, 49.2 to 49.8. That's the range for July. We also have a finance ministry briefing in about 30 minutes from now, so stay tuned for that. That's, of course, a separate issue as far as the economic conversation is concerned, not so much related to PMI. But yeah, watch out for any commentary coming through there. We should be getting the PMI numbers any time now, so just keep an eye on that. As you look at the open, though, we're looking at declines here. And, you know, we're flirting with a correction, in fact, on the Shanghai Composite. We're okay. 49.4 is the level right now, so bang in line with expectations. It's a slight drop, of course, from the 49.5 level that we got in the previous month. We're still looking at, give me a sec, I'm still looking at my screens where now we have the non-manufacturing gauge, and the survey there is for 50.3. So stay tuned for that once we get that come through as well. As far as market reaction, not so much here. We're still looking at declines, though, back to markets in some of the consumer staples like Maotai and Wuliangye, down about a quarter of 1% each on both. And this is really one pocket of the market that has done quite poorly. Okay, services out, 50.2 is the level there. And I think you're also getting a composite reading out too, Yvonne.
Yes, the composite's coming off 50.2, so a little bit of a slowdown from the previous month as well. But yeah, so if you could say, I mean, it's a slight miss on the non-manufacturing side, but in line when it comes to the manufacturing PMI. So that's really kind of the gist of it. Let's bring in, and we're talking a bit more about markets, obviously. But yeah, we're not seeing a huge reaction so far. Let's bring in our next guest, Helen Qiao from Bank of America Global Research, Chief Greater China Economist. What do you make of these numbers so far?
Well, I would say that the PMI for the manufacturing sector is probably largely in line with our expectation, also market expectation. Well, at the time in the past months, we saw that, you know, the higher temperature probably have contributed to the higher growth in the electricity production. However, you know, we also saw that in terms of cement and also steel, overall, you know, production, the output growth has been slowing a bit. So I think this is more or less, you know, in line with the expectation. People were not holding expectations high for above 50% number. So the very fact that it came in at almost flattish with last month, I think it's completely, you know, market neutral. But with that said, I would say that the hope is actually going into the second half. Now with the plenum down and also with the completed Politburo meeting on 30th, I think people now are placing higher hopes that we could see a little bit more easing in the second half, and therefore these IP numbers and PMI manufacturing could look better.
Yeah, what were your main takeaways from the Politburo and the messaging? Because that completes the messaging from policymakers from the plenum, and now we have this document, of course, that takes us into the next few months.
I think the most important thing, David, is that it completes the message from the policymakers. Yeah. So at the third plenum, that was talking about the medium to long-term reforms and what they plan to do before 2029. But this time, the Politburo meeting a few days ago was basically telling us that what they plan to do in the second half, mainly to make sure that we actually still achieve that about 5% growth target. So this is much more about the near term, and it also gives specific instructions over, for example, monetary, fiscal, property policy space, and in terms of how to stoke domestic demand, especially consumption. So I think that's more about the near-term suggestions that hopefully could lead to more rollout of policy easing step-ups.
They also call for maybe early preparation of these easing measures. I'm just wondering, how much does the U.S. election factor into that? Are they just kind of waiting until we get more news on tariffs before they actually, prompt some sort of action?
That's a good question. I would say that it actually brought in a little bit of flavor of that, I think, in the first 2 paragraphs of the Politburo policy readout. In particular, it was saying that the external environment is getting worse, and therefore we need to do more. So I think that was kind of like, recognizing the fact that the external demand has been helpful so far, but going forward, we need to more skew towards the domestic demand.
Yeah, well, what demand side measures do you think are probably coming now?
Well, now I think the key is to watch if there is more support on the consumption-related side. So from last week's $300 billion package that you saw, there was this fiscal support coming to not only equipment replacement but also consumer product trade-in program, and clearly that compared to previous ones that we saw, for example, in 2008, 2009, 2012, 2013, this one shows more support from the central government, a higher per item kind of subsidy amount. And also a more extended time horizon until the end of the year for the whole package. So hopefully this can bring in a little bit more confidence of the consumer spending. And at the same time, I think that possibly we could see some measures to support low-income families.
We've seen some of your peers lower their growth forecast for the year because of what we saw in the second quarter. Are you inclined at all to change your forecast right now?
Well, right now we think that the risk on the upside and the downside are still pretty balanced. Okay. So we're not intending to cut our forecast. But I would say that the second quarter numbers indeed is an alarming sign that if policy easing measures are not stepping up fast enough, we probably could see further downside to our numbers.
The conversations around inflation, and I posed this question a couple of weeks back. So if they're managing to hit the growth target at 5%, but not producing inflation at 5%, do they need to raise the growth target? Is my question.
Well, I would say that at the moment, the growth target is probably the most important. Right. And actually, as you see, the emphasis not only at the Politburo meeting 2 days ago, but also even at the plenum, they mentioned that it's very important that we achieve that particular goal.
Right.
So I think that at the moment, inflation is not necessarily in the picture because it is so low, and I don't necessarily think that the central bank is officially, setting their bar to say that, okay, our target is 3%, now it's too low, we need to do more to change that. But I think most of the attention is still on the growth target.
Okay.
What should we worry the most about? I mean, is it the further slowdown in manufacturing, or do you think the likes of what we've been seeing in the consumption side? Because we haven't seen even the summer travel season really help offset what we're seeing in the property side so far.
Yeah, the summer only helped the box office revenue, as you saw, but not too much in terms of consumer spending. Well, we are hoping that actually the package, the fiscal package to support the trade-in program could probably help give it a final boost. And also the high temperature, probably helped with some aircon sales so far. Yeah. But we have to know that there was a recent kind of replacement cycle as recent as in 2023, like only last year, because of the COVID reopening, and a lot of the people were holding up and waiting to change their aircon and other electronic appliances, basically all the way until 2023, when they feel comfortable to allow people to get into their households. So if they changed last year, it's very difficult to see that they will immediately change this year just because of that trade-in program. So while we had that little boost, I would say that in the near term, we probably may not see an immediate pickup.
The sense I get from what you're saying is, if there is a slight change to the growth forecast, it's probably higher, not lower. Do I get it? Well, is that correct? Is my reading correct? And is there a greater sense of urgency you feel from the way they're lining up the statement on the Politburo meeting, the focus on consumption, the acknowledgement that the economy is weak? Is something bigger coming? Is I guess my question. Does that boost growth?
David, do you imply the official change of the growth target?
No, because you mentioned that
forecast?
Your forecast is balanced either side. But my sense is you're probably inclining maybe to to bump that higher if all of these things come to fruition.
Of course, but that's a big if, right? So we will have to see, what happens in July and August in terms of the numbers. But I would say that, yes, we are seeing more hope, especially if you saw that the coordinated move between fiscal and monetary policies last week. So finally, they're working together. And a coordinated policy easing is actually what they have emphasized so much during the Politburo meeting this time. So we hope that we will see more of that. And after watching for now about 2 months, right, more than 2 months of how the property easing measures have already done since May 17th, this is about the time for them to reassess and probably do a bit more.
Does it mean that the currency is less of a constraint? I mean, they seem a little bit more tolerant about where the currency goes now, even when it comes to the CGB market, right? They're willing to cut rates despite this bond rally that continues today.
Yeah, well, that I think it's the thing. There is still little room in terms of monetary policy easing at the moment without the Fed cutting, and therefore I think that they probably would have to be a little bit more tolerant of the exchange rate on the exchange rate front. That said, the Politburo meeting policy communique specifically mentioned that they need to keep renminbi in the reasonable range, right? So what exactly is the reasonable range? How much is too much and how much is not enough? We're not so sure, but that probably means that we will see small movements, so you could see some crawling, but you may not necessarily see big adjustment.
Actually, I just have one last question too, because one area that stood out to you guys is this emphasis that local government should avoid interfering in economic matters. Like, how do I interpret that? Because that's a very broad statement.
Well, this is related, David, to the overall theme that we should actually give a level playing ground between the SOEs versus foreign companies and the private companies. And in particular, this was referring to the recent past, where some of the local governments, because of the drop in fiscal revenue, and especially due to the drop in the land sales receipts, they were coming more intensely towards the private companies in their coverage and asking them to pay back the tax that they own or do some other kind of investigation. That has been proven to be very disruptive to businesses, and therefore I think here comes the specific requirement for local governments to take their hands off.
Okay.
Helen, always great to have you. Helen Qiao there, Chief Greater China Economist of BofA Global Research. We got to recap this Aussie CPI print. It's definitely moving markets here this morning, especially take a look at the Aussie. We're basically seeing that big drop on the back of that. So the trimmed mean quarter on quarter was actually lower than expected. So 0.8%. Year on year was 3.9%. And basically, we're seeing a cool down of prices after two pretty hot prints that we saw in the previous months, Dave. So it's going to be a big question of what this means when the RBA meets next week, because people were primed to talk about maybe they'll still keep a rate hike on the table. Maybe we're talking about rate cuts now.
Yeah, so I'm looking at the current pricing on this. So the next meeting is August 6th. And we're looking at a 15% probability of a move higher there. But yeah, I mean, this probably changes the math. That's probably come down substantially from where it was just a couple of minutes ago. As you can see, of course, we're getting a further boost there as far as Aussie markets are concerned. Right. All right. Just ahead here in shows, we'll talk more about, well, speaking of central banks, there's one big one, of course, on deck over the next, I guess, 90 minutes or so. The Bank of Japan is set to give us their latest policy print. Consensus is no change, although news reports suggest we're in for a hike. Barclays joins us in a couple of minutes. This is Bloomberg.
We have a call that thinking of BOJ will hike this month, actually, right, since last month, especially when yen hit 162. And, the rhetoric has changed. When yen was 140, 150, everything was going okay. But when it hit 162, the sentiment really changed within the country too, right? There's chatter regarding yen might hit 170, 180, maybe 200.
A more likely scenario is to announce some tapering in terms of the bond purchases. Because if we look at real wages, for example, real wages is still quite negative, even though it has improved somewhat. And today's retail sales basically also sparked some hopes that, the ongoing consumer recovery is still there. But having said that, we do need wages to catch up a bit more significantly for the overall the emergence out of deflation into inflation by Japan economy to be sustained.
Probably consumption will rise. Consumption has not risen, but I think they can read that it will rise soon. So taking advantage of the expectation that they can explain that rate hike today.
So our guest today on the upcoming decision from the Bank of Japan. And for more what to expect, let's bring in Sherry An, who joins us outside the BOJ headquarters. She got on a cab. She got there quickly from the studio. And
or ran.
She has our next guest coming up. Sherry.
An exciting day all throughout, whether it's me trying to reach the BOJ in time for this hit or it's just the decision itself. Of course, we are expecting that decision in a couple of hours. My next guest expects a policy rate hike, and not to mention, of course, plans of the quantitative tightening that we're expected to see. Joining me now here outside of the BOJ is Barclays Chief Japan Economist Naohiko Baba. Thank you so much for being out here with me.
Thank you very much for having me today.
In this heat.
Yeah,
I mean, it's a hot day, hot in terms of what we can expect from the Bank of Japan as well. You had an early call already that we are expecting to see the interest rate hike.
Yeah.
This was not the consensus, but what makes you think that they will deliver?
Yeah, okay, so we are in the minority camp actually, so out of consensus goals. So we expect a rate hike, so together with QT announcement. Maybe so many market participants think that so it's very challenging for the BOJ to deliver both. So QT announcement, rate hike. So because this combination could generate some sort of a disruption in the JGB market. But we thought that the BOJ would successfully let the market people to digest pricing, QT programs, content, beforehand. So that we think that now, just before the meeting, QT issue is non-event.
That's very interesting, right? Because all of a sudden, the cuts in debt purchases have become, as you said, a non-event. But what are we expecting there that could potentially surprise markets? And what would that mean for JGB yields?
Yeah, okay, but our rate hike call is actually based on the very fundamental story, which is directly linked to the BOJ's virtuous cycle stories between the wage growth and the inflation. And if you look at the recent data and other information, for example, we saw a very strong Shunto number, historical high number, and this Shunto number is now being reflected on the macro-wide
Those
wage
are
growth.
the wage negotiations.
Yeah, wage negotiation, and then reflection on the macro wage growth. And then if you look at the inflation expectations, are very high actually, and the corporate expectation of inflation rate seems to be anchored at around 2%, right? So that all this information and evidence seems to be comparing for the BOJ to hike rate today.
Even we saw retail sales numbers this morning coming better than expectations, but at the same time, first quarter GDP numbers were still a contraction. Is that a problem?
Yeah, okay, potentially problem actually. So particularly the Q1 GDP was very bad. But I think this is basically driven by technical factors like some major automobile makers need to suspend production due to safety issue or something, and then also we had Noto Peninsula's earthquake, or correction of construction data and the like. And BOJ is now more like outlook-based approach, it's taken. That I think it's okay for the BOJ.
So you've put several scenarios in terms of debt purchase reductions. What would that mean for JGB yields?
Okay, so it depends on the combination of expected terminal rate in the future and terminal monthly purchase amount by the BOJ, right? And according to our simulation result, if we assume that the terminal rate is 50 basis points and the terminal purchase amount, monthly purchase amount is 3 trillion yen, this could point to about 1.3% 10-year yield. Yeah.
That basically means that we could see more Japanese investors returning home. Is that going to be a problem for global markets?
I don't think so. Maybe if anything, such a movement and capital seems to be very slow and gradual process. I don't expect a big disruption. From that perspective.
When it comes to the Japanese yen, how much of a boost are we expecting here if we get a hawkish BOJ with a rate policy hike, not to mention, of course, the debt purchase reductions?
you mean the impact on the yen rate. So already, so after the leak article, so I mean, so several hours ago, so yen dropped, the dollar yen dropped, so to 152 or something. So maybe after the decision making, so I mean, so dollar yen may recover a bit, but the total net amount of change is something like 1-2 yen or something.
Some people were saying coming into this meeting that because we have a stronger yen, that could give some leeway for the BOJ to hike rates. I mean, they don't want to seem like they're hiking because the yen is too weak, right? At the same time, we've seen considerable pressure coming from the government. Could that be a factor?
Yeah, I think so, maybe. Yeah, particularly interesting one is observation is that the recent seeming likely intervention. So in July, actually. So in the recent past, so intervention is something like a very defensive one. So like a smoothing operation. But this time around, so intervention seems to be like a more, I mean, level correcting intervention. So that I feel that the government stance on the weakness of yen seems to be changing, and then potentially putting some pressure on the BOJ.
When you say level correcting, was that because we're expecting the US CPI numbers and the dollar dropped, and that shouldn't have been a problem for the BOJ, but they actually had the government intervening in the markets. Yeah. What are we expecting in terms of some global central banks and the divergence that we're going to see with the BOJ? Because, of course, after this decision, we have the Fed.
Yeah, it crucially depends on the forex rate, actually, implication. Yeah, but I think the current level still, so like 150 or 155 or something, it is still excessively weak. So I think that's a common feeling shared by the government people and the BOJ people. So now, if today, the BOJ successfully delivers a rate hike, and then tomorrow, so FOMC started to cut, send us a message, clear message. I think it's a good thing for the BOJ and the government, because we expect the dollar yen to move down a bit more. Yeah.
Naohiko Baba, really great to have you here with us, joining us on a very hot day outside of the BOJ. His Barclays Japan chief economist. Sending it back to you, Dave.
Yep, hot enough to hike is the question, though. Sherry, of course, will be standing by there for that decision. Should come out in about an hour or so, give or take for now. Right, you can also turn to your Bloomberg, by the way, for more on this upcoming rate decision, TLIV Go, commentary, analysis from our expert editors here at Bloomberg. Plenty more ahead. This is Bloomberg. Can't believe it's a third day. I need to talk about Prada. You had that store opening in Hong Kong, news of that 2 days ago. Earnings preview yesterday, earnings recap today. In the case, of course, I'm not complaining. There is something to talk about, certainly. As you can see, the shares are up substantially. Sales beating estimates here.
Yeah, as Adriel Chen mentioned from Hang Lung, right? They're not seeing a slowdown specifically when it comes to China's consumption. It's just they're going overseas to buy. And definitely that weak yen is helping these Chinese consumers splash out in Japan and really helped with these results there. So that's why you're seeing that pop in Prada shares. Samsonite as well, we focus on some of the luxury stocks. Higher smart home as well as Medea. This is more on the Politburo meeting. And really what we heard, this little more emphasis on the consumption side of things, and maybe has getting the market a little bit more excited that maybe we'll see some more measures to lift consumption as well. And really, when we take a look at Aussie assets, there's really is excitement about, wow, cooling inflation in Australia. Take a look at where yields are on the 3-year. We're down 21 basis points here right now as the pendulum swings, more leaning towards maybe we might see some rate cuts being talked about from the RBA next week. And we got more excitement from the BOJ coming up from Sparx Asset Management. Welcome back to the China Show. Here's a look at the CSI 300 a half hour into the session, and we're actually seeing a decent session underway here, just about half hour into the trade, and really we're up 0.6%. The PMI numbers, I think it really just kind of suggests that there's still that weakness in the economy here right now. It didn't really move the needle when it comes to markets here this morning, but you're still watching when it comes to MSCI China today, a slight bid when it comes to these equities as we count down to the Fed, the BOJ, CGB yields also lower for a fifth day.
Yeah, 213 now on the 10-year yield.
Oh, yeah.
In China. So I think our story yesterday was really we're now going into intervention watch with the bond markets pushing the limits of. And we don't know what that new line in the sand is for the PBOC. It used to be 2.2%.
Yeah.
And we're now headed to 2%. I think ING came out and said we could head to 2%.
We could test 2%.
We could test 2% on the 10-year yield. Yeah, what does it mean for the currency? So, yeah, we'll keep an eye on that as well coming through. Now, as far as some of the movers are concerned in China, so you are getting some movement in consumption stocks. Although, broadly speaking, right, we're moving into the Fed where maybe we might get a bit more clarity on when they do plan to cut interest rates. September is fully priced. I should mention that, too. Microsoft, down in after-hours trade, was down as much as 6%. So maybe the pullback from the edge we're seeing in these tech stocks is really, I guess, in some ways pushing NASDAQ futures up, 0.7%. So a recovery is maybe in the offing here. It's BOJ Day, and while we'll get more from Sherry in a moment. She's on the ground for us, of course. But JGB markets are moving as if the BOJ will definitely hike today. And as you can see, we're up substantially. It's a flatter curve as well, up 7 basis points on the 2-year yield. And as far as the yen is concerned, we are getting a lot of hedging coming through. Overnight implied vol coming up on your screens is now at the highest level of the year to capture what might be a big move in the Japanese currency, depending on what the BOJ tells us, of course.
Yeah, let's bring in our team. Sherry An is on the ground outside the Bank of Japan, also in Singapore. Mary Nicola, our MLive strategist, on what this impact could be once we do see this BOJ decision. Sherry, I'll start with you. How hawkish is Wade Sound likely going to be?
Most economists surveyed by Bloomberg were expecting no hike when it came to the policy rate target today. We were focusing very much on the cutting of bond purchases. But then this morning, we wake up with local media talking about board members discussing a rate hike. What does that mean? Does that mean that potentially there could have been a leak with the BOJ preparing markets for a potential rate hike today? That would be a very hawkish turn for the BOJ. That could lead to a rally in the Japanese yen. The Bank of America has put up around 140 per dollar if that's the case. Today, though, we'll be very much focused on that policy rate decision, as that quantitative tightening side of things has already been sort of choreographed.
Yeah, Sherry, I mean, what exactly or what specifically should we expect along quantitative tightening today?
Bloomberg Economics had already made the call that we were going to see that the rate policy being hiked to that upper bound target of 0.25%. If we do see that, that could potentially mean a very hawkish turn, which could also bring up the question of, will we see another rate hike again later in the year? What we'll be watching out for very carefully as well will be the economic projections, because some economists are expecting a downgrade when it comes to the economic growth outlook for this year. Also potentially the core CPI outlook being cut for this year but being raised for next year. That will give us an indication of how much more hawkish the BOJ is ready to turn. But in the meantime, we continue to watch those yen levels, of course, because we have seen that recent strength in the Japanese yen that could potentially give a little bit more leeway for the Bank of Japan to act, because you would think that the Bank of Japan would want to hike rates when the yen is very weak. Well, potentially they don't want to give the impression that they're beholden by the currency. So this meeting today could actually be an opportunity for the BOJ to hike rates, according to some of the economists that we've been talking to this morning.
Sherry An in Tokyo for us. The Asia trade co-anchor, of course, just awaiting, of course, the Bank of Japan decision could come out in about maybe this hour. Let's see. Right. In the last hour, we did get some numbers coming out of China, official PMI numbers. This is for July. It came in bang along with estimates here as far as 49.5 is concerned. Manufacturing. Non-manufacturing, that's July, by the way, not Julu. Okay. In any case, of course. 450.2. It's bad. Let's live TV. Anyway, I think, Yvonne, we did hear, though, from Helen Qiao when those numbers broke. Yeah,
she basically said that, the message from the Politburo was that it basically was a coordinated response, right? You're starting to see more of this post-plenum, post-Politburo meeting. And really, given how weak the second quarter was, she's saying that investors are really hoping for maybe some stronger numbers for the rest of the year. Take a listen.
people were not holding expectations high for a above 50% number. So the very fact that it came in at almost flattish with last month, I think it's completely market neutral. I think people now are placing higher hopes that we could see a little bit more easing in the second half, and therefore these IP numbers and PMI manufacturing could look better.
Mary Nicholas with us to talk us to market angles. All the big stories today, Mary, everything from tech earnings to the BOJ to China to the Fed. Samsung's also out with earnings too. Take your pick. What do you think our top story should be today as far as markets go?
Yeah, I think the main thing for us is just about the BOJ, because obviously there's a lot of excitement coming in into how the markets react. We saw how the markets reacted overnight when the story broke that the BOJ could potentially hike. So now it's all about the BOJ actually delivering if we see that momentum in the yen to continue. So not only will they have to actually deliver on a rate hike and, starting to reduce that bond purchases, but they will also have to provide some sort of clear forward guidance that this is not a one and done, that there is more to come if we're to see that yen strength really coming through.
And I mean, I don't think it's just the BOJ that can do that heavy lifting, right? I mean, how much does the Fed play into this, right? If they actually do signal that September cuts are definitely underway, how much more further strength can we see in the yen?
Yeah, that's exactly it. So you need that combination, not only from the BOJ, but you also need it from the Fed. So let's say you get the combination of the two, where the BOJ tells us that things aren't done, then the Fed tells us that they're signaling some sort of September rate cut. We could see 140 easily coming through on dollar yen. So it's a matter of the combination of the two. It can't be one versus the other or one only in line. So it is the onus on both central banks for the yen to really gain that momentum and to gain strength coming through. But at the end of the day, we still have to see that we've been disappointed in the past from BOJ meetings, especially the last one where they were supposed to start unwinding their balance sheet, and that didn't come through. So it is really on the yen, on the BOJ to signal that they are going to start their tightening process, that they are going to start hiking rates.
Mary, just your thoughts on where we are in this drawdown in U.S. equities, particularly in big tech. I mean, markets woke up in Asia to another terrible session on Wall Street. Then we had earnings coming through AMD. Microsoft came out, so I think we also had a scoop on Intel. Where do you think we are in this process? Have we flushed out all the unnecessary longs out there? Or do you think we still have ways to go here to the downside?
Yeah, I think there's a lot of nervousness out there about tech and of course about the tech earnings. So obviously, because valuations are quite high, the earnings really need to justify where this is going and and how the tech earnings are going to continue and how tech will continue. So it really comes down to how earnings evolve over the next few days and some of the other companies that will come through. And of course, the big one, NVIDIA, over the next where we see where the earnings come through. So, of course, until then, you'll still see a lot of nervousness. You'll see a lot of overreaction from the markets because you still want to see these earnings justify the high valuations that are in the companies. And so until then, we can see a little bit of a squeeze coming through. But of course, if the Fed comes through and starts signaling that they're going to start cutting rates, that obviously changes the trajectory for equities going forward.
And it seems like the narrative changing around Australia and what the RBA could do next week after that cooling of prices when it comes to that CPI print, Mary. I just wonder, is it just a matter of when now, not if, with the RBA cuts or not?
Yeah, but obviously it's going to take a little bit longer because, yes, the inflation numbers were slightly better, but it wasn't as if it signals that they're ready to cut just yet. So I think there's a little bit of wariness here, but it does take to some degree the hikes off the table. But it's really about more of, yes, it will cut, but it's just a matter of when, and it may take a lot longer than we previously think. And again, it's just, it's one number, so we have to take things of where the trend is heading, but the trend is heading in the right direction.
Thank you, Mary Nicola there. MLI strategist joining us out of Singapore. Yeah, Westpac came out with a note just now that Aussie inflation data is shifting the focus now to RBA rate cuts. They're saying maybe November, maybe the start of that cycle. Still ahead now, we're going to talk a little more about U.S. politics. Democratic presidential hopeful Kamala Harris wiping out Donald Trump's swing state polling lead as her honeymoon continues with voters. The details coming up next. This is Bloomberg.
We'll take you straight back. By the way, welcome back to the show. We'll take you straight back to Beijing right now, where there's an ongoing briefing from the Vice Minister of Finance there speaking. That's Wang Dongwei. To media about financial measures to promote high-quality development as that is taking place. Do we have pictures of that? No, that isn't live go for our Bloomberg clients. I should mention that the 10-year yield following the PMI numbers, which came through as well, hit a couple of basis points further. We're now trading at a fresh record low on the 10-year yield. Yeah, we'll have a look, please, at live pictures coming out of Beijing, and we'll get to you any sort of breaking news that comes through out of that briefing. A lot is in focus, given the fact that the focus of markets has now shifted from monetary policy to fiscal policy. I guess we don't have that. Anyway, we'll talk about it later.
Yeah, let's talk a little more about the politics, though, right? The latest Bloomberg News Morning Consult poll shows that U.S. Vice President Kamala Harris wiping out Donald Trump's lead across 7 battleground states. Now, data does show that Harris is riding a wave of enthusiasm among young, black, and Hispanic voters. Our Derek Wellbank joins us now with the latest on this poll, of course, this wave, as you mentioned. And it certainly is encouraging to see, this lead, or at least the narrowing between Trump and Kamala Harris. What does she need to do? I mean, can she continue to ride this wave until November?
Well, I think Kamala Harris will be encouraged by this sort of polling, and she has to be encouraged by the way that that the race has sort of shaped up in the last 2 weeks, right? She steps in for Joe Biden, rapidly consolidates the Democratic Party in about 2 days. And now in the last couple of weeks, has seemingly erased what had been a pretty pronounced advantage for Donald Trump across most swing states. As you mentioned, the Bloomberg Morning Consult poll shows Kamala Harris up by 1 point across all 7 of the most critical swing states. That's Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania, and Wisconsin. It also shows Harris with a substantial lead in Michigan, as well as narrow leads in Arizona, Nevada, and Wisconsin. If you played this out across the entire map of states, you would find an almost coin flip election developing here, which is not a lead, is not a guaranteed win, is not anything like that, but it is certainly quite a reversal from the situation we were in just a month ago, where Trump had opened up a pretty considerable lead in most of the polls. And keep in mind, this comes before some major events for Harris. This is before the convention, and it's also before that critical vice presidential pick that she has to make.
Yeah, Derek, you bring up a very good point. Just a month back, it was almost all Trump, and then here we are a month after talking about it being a coin flip. What does Harris need to do to keep this momentum up? And you probably know this, obviously, right? The elections aren't for a few months.
Yeah, the elections are just a little under 100 days away. And like for global context, you could run an entire British election in that time, or a French election, as we've seen. Like the U.S. elections are very, very long by global standards, and a lot can happen. I mean, consider, David, we had an event that hasn't happened since 1981, a president or former president gets shot. An event that hasn't happened since the 1960s, a president start a campaign and then not finish it. Right, and both of those happened within the space of 2 weeks. So there's a lot of time for unprecedented events. I don't want to sit here at any point and say that something is pre-baked or this is, how it's going to end. But certainly this is the way, if you're Kamala Harris, that you wanted to start. And I think that's the critical thing. So how will she be able to keep this momentum going up? Now, Trump picked J.D. Vance, the senator from Ohio. That's had a bit of rocky rollout as some of Vance's prior words have come back. she's got a choice between a couple of people who are relative, I wouldn't say centrist, but let me say in the practical side of the Democratic Party, who are on that vice presidential shortlist. Pennsylvania Governor Josh Shapiro, Arizona Senator Mark Kelly, Tim Walz, the governor of Minnesota, are among those names. Those are folks from swing states, from places that could bring something to the ticket regionally. Let's see how this pick goes out. I'm expecting that within the next week. And then let's see how that convention goes. At that point, you're part of the way through August, and you've taken a third of that remaining time off the board. So there's a lot of time to go. As we say, there's some big decisions that Kamala Harris has to make here, the biggest one being that vice presidential pick. But she's going to start a barnstorming tour with whoever that happens to be. We're expecting next week. So there's going to be some more chances for momentum to continue there.
Derek, thank you. Derek Wellman there with the latest on this U.S. election race. Some other top global stories that we're tracking for you today. Israel says it killed a senior Hezbollah commander with an airstrike on the Lebanese capital of Beirut. The strike was in retaliation for a rocket attack that killed 12 people on Saturday in the Israeli-occupied Golan Heights. Israeli officials say no further actions are planned for the time being, and that's helped ease concerns of escalation into a full-blown war between Israel and Hezbollah. Venezuela's government has hardened its stance against protests over President Nicolas Maduro's self-declared election win. A senior figure called for the arrest of opposition leaders, while Maduro used a speech to accuse them of leading a fascist conspiracy involving the U.S., drug cartels, and Elon Musk. Separately, Maduro told a Brazilian official he would release the full voting records within days after the opposition said it had hard evidence of fraud. Indian officials say more than 90 people have been killed in landslides that buried several villages in the southern state of Kerala. Hours of heavy rain triggered the disaster, and bad weather continues to hamper rescue operations. The first landslide happened at 2 a.m. on Tuesday when most people were sleeping. The Indian Army has been deployed to help with rescue efforts there. We got plenty more ahead. This is Bloomberg.
Welcome back. Shares of Microsoft in after hours paired. Most of its losses still lower, though, after the company reported slower growth in its Azure cloud unit, and of course the result fueling concern among investors anxious to see a payoff from AI. Our colleague Ed Ludlow has more on those results.
Ultimately, Microsoft Azure cloud services growth is slowing while capital expenditures are going up. So Azure cloud services saw 29% top line growth, 8% contribution specifically from artificial intelligence. That was up from a 7% contribution from AI in the prior quarter. But this is a quarter where, one, you don't miss estimates, the street punishes you, but also we know that it's about the money machine, right? Investors look very closely at the money going in on AI, investment into infrastructure. For Microsoft, there was a significant jump there. They're finding it hard to see the money coming out. And although there were some more specific data points on the earnings call, Satya Nadella saying there are 60,000 Azure AI customers specifically. That's a 60% jump year on year in that customer base. The number of Copilot users doubled in the quarter, for example. But it seems like what investors wanted was just a dollar figure. Help us understand the revenue directly coming from AI. It was also interesting to note that sort of regionally, Europe saw weaker than expected growth for Azure, and Activision, the video games company that Microsoft acquired at the end of last year, contributed overall to top line growth 3%. I thought that was interesting. Another big story that happened during all of that was Bloomberg reporting, according to sources, that Intel's prepping to lay off thousands of staff this week as part of an effort to cut costs so it can get refocused on its foundry business and kind of respond to what have been pretty weak earnings. The announcement could come soon. We'll bring you more on that story as we get it. But of course, Intel due to report earnings on Wednesday after the US market close. Ed Ludlow for Bloomberg News in New York City.
Let's continue on with the earnings side of things. Samsung has reported its fastest pace of net income growth since 2010 after the AI boom lifted earnings at its chip division. For more, let's bring in Adriel Hong. What do you make of the results? What stood out to you?
Well, it was a stellar set of earnings. It handily beat those expectations. For a profit, it came in at $6.9 billion, and this was well past the consensus. And we also saw it several-fold, much better than some of the previous quarters. So it's really a matter of pick your superlatives here. This is driven really by the chip division profits, and this is on the back of all this AI spending that we're seeing. And it also signals this recovery in the global computing market that it's emerging in some ways from this post-COVID downturn, right? And we're seeing how AI spending is really fueling things from US to China. And amid all this, Samsung actually sees solid demand for memory going into the second half as well, and also rising demand for smartphones. So all around, it looks like a pretty good set of earnings. Some of the other things that we're watching as well is whether we get any further indication that Samsung is really closing the gap with its chip rival SK Hynix when it comes to the approval of the latest chips for use with NVIDIA. I think that's one thing that's really, really key to watch. We have Bloomberg Intelligence already putting out a note that even though chip margins could climb, this could still trail in comparison to SK Hynix, guys.
All right, Adriel, thank you. Adriel Hong there joining us out of Singapore on those Samsung earnings. And obviously, we're checking some of these chip stocks here this morning. Given just, the slight, movement when it comes to Samsung Electronics, we're up 0.75% as well. But the rest of the semiconductor space is a bit mixed here right now. Taiwan Semi is actually quite lower. SMIC in China is up close to 2% here right now. Yeah,
following, again, a terrible session yesterday, but I think more fittingly for markets is what happened in the after-hour session. That we did not continue the route, largely speaking, that we had in the cash markets, and hence look at this. We're up 1% on the Nasdaq futures going into the mid-morning part of the Asia session. Dow futures are down. S&P futures are trading slightly to the upside here, 0.4%. So we're still about 9% down from the peak on Nasdaq futures. So still in correction watch there. Okay, plenty more ahead, including a wrap of the Japanese markets going into the lunch break and potentially the BOJ policy decision at some point over the next 30 minutes. This is Bloomberg.
We expect a rate hike, so together with QT announcement. Maybe so many market participants think that it's very challenging for the BOJ to deliver both. So QT announcement, rate hike. So because this combination could generate some sort of a disruption in the JGB market.
We have a call that thinking of BOJ will hike this month, actually, right, since last month, especially when yen hit 162. And, the rhetoric has changed. When yen was 140, 150, everything was going okay. But when it hits 162, the sentiment really changed within the country too, right? There's chatter regarding yen might hit 170, 180, maybe 200.
A more likely scenario is to announce some tapering in terms of the bond purchases. Because if we look at real wages, for example, real wages is still quite negative, even though it has improved somewhat. And today's retail sales basically also sparked some hopes that, the ongoing consumer recovery is still there. But having said that, we do need wages to catch up a bit more significantly for the overall the emergence out of deflation to inflation by Japan economy to be sustained.
Probably consumption will rise. Consumption has not risen, but I think they can read that it will rise soon. So taking advantage of the expectation that they can explain that rate hike today.
So our guest today talking about expectations from the BOJ, and we talk about how hot it is in terms of the temperature, but certainly when it comes to just the anticipation around this Bank of Japan meeting, you certainly are feeling it. But take a look at the yen gains, though, that we've seen this morning, already sort of evaporating right now as we count down to this decision, Dave.
Yeah, any minute now, but what's the pervading mindset is if there is a change to policy, the decision comes a little bit later because of, I believe it's translation into the English statement, and then I think it's scanned and then it's put on the BOJ website, which is quite an adventure, by the way, if you're a financial journalist covering Japan. Right, you look at a 10-year JGB on your screens right now. The 2 year is actually moving quite quite a bit. There we go. You're up 7-8 basis points. I think it's NHK that reported that we might actually get a rate hike today. I mean, we'll get confirmation if that report is accurate or not. As far as the yen goes, Yvonne was talking about this too. So implied vol on the overnight is now at about 31, 32 points, which effectively puts us higher than the peak back in April, which effectively means there's a lot of hedging going on. Implied overnight vol, which obviously encapsulates the move today. Get the chart up, please. Thank you. Is now at the highest level so far of the year. Okay, so the stakes are high. Anticipation, maybe, kind of high. What does it mean for equity markets? Let's bring in Masakazu Takeda, portfolio manager at Sparx Asset Management. He's here with us on set. Good morning, Masa. How are you?
I'm good. How are you?
You mentioned that this is a rising nominal rate environment in Japan, not so much real rates. Do you think there is more room for nominal rates to go higher, even further from current levels?
Well, I think so. I mean, like you said, the nominal rates have been gradually moving up, but the real rates have been consistently negative because of inflation that Japan has desperately needed. I think in terms of monetary policy, the common narrative has been that BOJ has made mistakes in the past by lifting the zero rate policy prematurely, 2000, 2006, 2007. So I think this time around, I think the current governor probably wants to err on the side of higher inflation. So that means you have nominal rates inching up gradually, while the overall monetary policy framework remaining accommodative, and that's good for equities.
What specifically for equity markets are you looking at? I know in your portfolio you look at financials quite closely. How bullish are you on that sector right now?
Well, I think Japanese financials in general, banks, insurance, P&C insurance, and the financial services companies. So 3 insurance companies in Japan, we own all 3 of them. Orix is a financial services provider, also an investment house. We own that as well.
Okay, the call in financials is what? Because of rising rates? Is that something else, for example? In other words, that group has done extremely well already. And I'm wondering, do you lean into that trade even further, and why?
Well, so the macro consideration is just an afterthought. So we look at the fundamentals, the businesses, and the modes. Okay. And so P&C industry in Japan, there are only 3 players left after years of consolidation. They control 90% of the market, and as such, they have strong pricing power. Combined ratios less than 100% consistently. Wow. I think nowhere in the world has this kind of market share concentration. So we think it's very attractive. Orix is more of a initially hidden play, hidden beneficiary of recovering inbound tourism. They own Kansai International Airport. They do aircraft leasing, hotel operations.
What assumptions are you making of the currency? Because, how do you look at what the fluctuations that we've been seeing the last few weeks in your strategy right now?
So I think the currency, it's depreciated a lot in the last 2 years. And that's mainly because of the widening of interest rate differential with the US dollars, and also decades-long structural changes in balance of payments of the country. And Japan no longer has huge trade surplus. The yen has reversed in the last few weeks or so. But I don't think I think it's unlikely that the yen will be strong again like 15, 30 years ago. And that's usually good for exporters because the weak yen makes them stronger.
Yeah. You also mentioned that part of your overweights are in chips.
Yes. So we went all in picking up semiconductor-related names in 2022, October, when we had the U.S.-China semiconductor trade war. Japan has a lot of market leaders, like Semicap, Tokyo Electron. Shinyasu Chemical is the largest silicon wafer manufacturer, as well as specialty chemicals. So I think a long growth runway there.
Were you bothered by the recent sort of pullback across some of these? Tokyo Electron comes to mind the last 2 weeks, of course.
Right. Because it's gone up a lot, speed bump was unavoidable. But we're long term. At the minimum 3 to 5 years, if not longer. Some of our investments we've been owning more than 10 years. So, yeah.
Is there just an expectation then that eventually that these AI investments are going to at least come into fruition to generate some sizable revenue? Because right now we're not quite seeing it just yet. in some of these earnings that we've seen so far?
I think as a manufacturing business, semiconductor has a lot of things going on right now. Technology advancements, whether it's 3 nano, 2 nano, or even beyond that, gate all around. That will create a lot of new demand for new equipment, new technologies, and so on. AI is another driver. I don't think we see this kind of dynamics in other manufacturing sectors.
Right. What about domestically focused equity markets? And not so much about the macro conversation, but are you seeing some of your exposures there benefit from what seems to be an economy that's in a better place than 5 years ago?
I think so, definitely. So the consumer sentiment, I think how much it will rebound, I think it remains to be seen. But I think the inflation is something, Japan is the only country that pretty much welcomes inflation, compared to other countries in the world. And, we're seeing signs of sustainable inflation, like inbound tourism is a good driver. Inbound foreign direct investments, TSMCs of the world, they are building new chip factories, and that's creating, economic boom in some cities. So those are, I think, very promising. Japan may have entered sustainable inflation, and now we have to wait for the consumer psychology to catch up.
Is there a good way to express that in the equity market? I know you look at 7 & I, a consumer stock, very much.
7 & I is more of it's an international play. So we always look for businesses with international operations, so that if there's a strong pickup in Japan, we're all going to benefit. But at the same time, we're not betting on Japan, just one geographical basket. And I think 7 & I Holdings, in Japan, it's already dominant oligopoly, slow growth, but very mature cash generator. U.S., after the acquisition of Speedway, they have become number one already, but the market is much more fragmented, so there's a long runway for growth.
You mentioned inflation is something that we're not used to seeing in Japan, and I'm wondering, also with the weak currency, do you think that's forcing consumers to finally remove their savings from these boring deposit accounts and deploy them into something that's higher yielding? I mean, do you expect more inflows into the equity market is what I want to get to.
I think so. I mean, that has to happen. No one in the current generation in Japan has experienced inflation growing up. So, but, if they're rational, if they do rational behavior, then naturally, people should start to move their savings into investments. And right now, with the introduction of new iteration of NISA, starting from beginning of this year, a lot of the money has gone to overseas, S&P 500 and MSCI World. But I think we are slowly starting to see more money going into the Japanese equities as well.
Okay, so the bull market is just getting started?
We hope so.
Okay. Masa, fantastic. Nice to see you.
Thank you.
Masa Takeda, their portfolio manager at Sparx Asset Management. We are expecting, of course, a Bank of Japan decision any time now. So in the next hour, of course, we'll be talking to a former BOJ member. Sayuji Shirai will be asking why the central bank is cutting back on its monthly bond purchases, if and that is indeed, of course, what they announced. And, of course, for Bloomberg clients, you can turn to your terminals. For the story, TLIV Go, commentary analysis from our expert editors here. And, of course, on your left is a live shot of the Bank of Japan. And somewhere there on the mean streets of Tokyo is our co-anchor, Sherry Ann, standing by for some breaking news. This is Bloomberg.
All right, let's take a look when it comes to Hang Lung Property shares, struggling to really stage a rebound today after tumbling on Tuesday by the most since 1997. That's after the company cut its dividend by a third. Their chair, Adriel Chan, spoke to us exclusively about the reason behind the move.
This is really a reaction to the performance. You'll notice that our underlying profit has been down about 22%, while our revenues are still sort of stable. This year we had some property sales, but really what we look at on a regular basis is the mainland China recurring underlying rental property profit, and that is what is really down. The macro environment is really tough. There's a lot of uncertainty. There's a lot of question marks around the Chinese consumer, and so this is really a reaction to all of that.
Do you see this persisting, the weakness in China, as a way against? Do you have a road back to as far as the dividend is concerned? It's the second part of it.
Look, nobody ever wants to cut the dividend. If I didn't have to cut it, I wouldn't have. But I think the interest rates are still high. There's a lot of uncertainty around the Chinese consumer. We talk to the brands a lot, and the brands are still a little bit uncertain. Last year they were talking about maybe growth in second half this year. Now they're talking about fourth quarter. Some brands are saying maybe next year, and so there's a lot of uncertainty, and this is really a reaction to that.
Not just when it comes to the retail side. I mean, in terms of some of the sales progress of some of your service departments in China was quite weak as well. I think you only sold 6 units in the first half. Would you consider cutting prices in the second half?
Look, these days you have to do whatever will make the inventory move. So if that's what it takes, then that's definitely on the table. That being said, we are a premium product, and so we don't want to cut too much. But that has been slow, especially since we're selling service departments rather than residential, which is slightly different in the market size.
Do you think the markets are overreacted? I mean, you and I bumped into each other before you walked in here, and it was quite a day yesterday.
I would like to say that they have. If you look at our dividend yield, it's still very, very healthy.
Right.
If I'm not mistaken, we should be around 9% right now. So that's still a little bit on the high side.
Even with the stock drop.
Exactly, even with the stock drop.
Thanks to the stock drop.
Well, prior to the stock drop, we were trading at around 12% dividend yield.
Okay.
And that's just way too high if you compare us to our peers. I think we're still a relatively high quality name. We have strong management. We have a strong pipeline. We have a strong operation in China. And so, I think that it's been a little bit oversold, I'd like to say. Definitely, I will be looking into getting into the market myself because of these prices.
You mentioned about the uncertainty around the Chinese consumer. Are you really seeing clear trends now of wealthy Chinese heading overseas to shop versus at home?
Oh, the yen, the weakness of the yen was a huge factor in the last half. There's so much travel to Japan, although the numbers are only 66% of pre-COVID, so there's a 34% drop in number of Chinese travelers to Japan pre-COVID. The spending per capita is up by 50%, so they're buying up all the luxury bags and all the luxury products in Japan because they were about 30% cheaper. And so that really had a big hit. The biggest drop for our portfolio was in Shanghai. And Shanghai is, as you know, a very sophisticated customer, but it's also the wealthiest customer. So when they travel, then that really hit us.
And that was a Hang Lung Group and also the properties there, two separate entities, of course. Listed stocks, at least, not completely separate, obviously. Adriel Chan there with us earlier here on set. Now, that takes us into the broader earnings conversation here. So far, what we've gotten out of guidance, first half prelim numbers, Morgan Stanley has put out this note and effectively saying the ratio is actually a lot more skewed to the downside as far as negative guidance is concerned. And I think that their current thesis is it's too early to call the bottom here on the earnings story in the Asia market that's onshore.
Yeah, that's after looking at more than 1,600 companies, basically, and the results that we've seen in the prelim. So Laura Wang coming through with that report. So might be too late and might be countering what some of the bullish calls that we heard from the likes of UBS, SocGen, who talked about maybe better China corporate profits to come here. But really, it seems like we've been seeing some pretty surprise misses in the second quarter. And really the lack of policies, right, to really revive consumption. That continues to be a clear sort of pattern that's really driving this stock sell-off here right now.
Yeah. And speaking of earnings, HSBC comes out with earnings today here in Hong Kong in about 2 hours from now. So here's what the stock is doing ahead of those earnings, 1.7%. And Noel Quinn out of HSBC, the outgoing boss, of course, joins us in a few hours, about just under 2 hours from now. Time's on your screens. Do tune in, of course, for that conversation with the boss at HSBC following the dropping of results.
Yep, everything from Fed rate cuts and what that means for the bank, this new CEO coming in through as well in September. But yeah, when we see what the earnings picture has been, I mean, there's this interesting flare of the weakness in China really impacting some of these results, particularly when it comes to the multinationals. We talked about, Hugo Boss Watch, LVMH. I think Prada was the latest one that really kind of chimed in on that discussion. Starbucks as well. What we've been hearing overnight was that they were saying same-store sales in China declined more than expected in the third quarter, and then that's due to a slump in transactions and average ticket sizes. Starbucks is also facing fierce competition from lower prices of competitors like Luckin Coffee and KFC. The company's CEO says they're in the early stages of exploring a strategic partnership in China. And L'Oreal reported sluggish sales growth in the second quarter as well due to persistent weakness in China. The cosmetics giant says revenue from North Asia, which includes China, fell by over 2%, marking the fourth straight quarter of declines. L'Oreal says the beauty market there faces weak consumer confidence. And on the other hand, Prada saw a jump in sales for the first half of the year as Chinese shoppers splashed out in Japan. The Italian fashion group says its retail sales in Tokyo surged 65% in the second quarter, helped by strong tourism flows. Japan has been a favorite destination for Chinese consumers, taking advantage of the weaker yen to pick up some luxury goods. So it's a bit of a mixed picture, but certainly some are benefiting more than others as well. Prada shares up some 2%. This is Bloomberg. Here's your China brief. A look at what's making headlines in national newspapers and state media are highlighting President Xi Jinping's call for efforts to help China meet its growth target. Xinhua says Xi made the remarks at a forum with non-communist parties where he also sought opinions on the economy. At the meeting, Xi reportedly acknowledged problems facing the economy, but said those issues could be overcome. He also told his audience in China is taking new strides in promoting, quote, high-quality development.
Yeah, here's a notable item on the front page of the party's official mouthpiece, that's the People's Daily. She is congratulating Nicolas Maduro even as international pressure grows over his disputed election victory in Venezuela. And the short piece highlights strong ties between the two countries, saying that China will firmly support Venezuelan efforts to safeguard its sovereignty and oppose external meddling. Maduro's government is cracking down on any resistance, arresting more than 700 people, including a prominent opposition figure. Okay, that takes us into almost the end of the show and the end of the month. And July has really been a fairly painful one if you've been long these concentrated trades, right? So I think the semiconductor index, the Philly Semiconductor Index, is down 10% this month. In fact, we're nearly at the distance to a bear market is about 3.5%, so a bad day away to get to that level. And of course, other things, as you can see on your screens, it's been terrible, but expected, really. Nothing goes up in a straight line.
Yeah, and I think so far these earnings, for the most part, have disappointed, right, when it comes to U.S.
Well, the
tech.
bar's been set so high.
It's been set so high. I mean, even Microsoft, even though it was a beat, people were saying, when it came to those cloud numbers, I just wanted to see a little bit higher. That attribution from AI was, I think, about 7-8%. They wanted it maybe just a little bit higher to suggest that maybe things are really starting to come to fruition. But you take a look at what's also been going on. I mean, it's about really not just the Trump trade seems to be hitting a peak. That certainly is one. The Fed discussion seems to be a little bit more clear about what they could do, and we might see a little bit more of that signaling here today. But yeah, is there still more to come in this rotation? Is still a really big question.
Yeah, most of the things that I think markets were trying to price and discount for, I think we now almost have full information on those things, right? The Fed and the cuts, depending on what they say it at this upcoming meeting, or does Jay Powell? And I think BE really put this out very, very nicely. He said it might be too early for the Fed to cement the September cut because you still have 2 inflation reports. You have 2 job reports coming as well. And there's a better window of opportunity to become more flexible at Jackson Hole, which is the end of August.
Yeah.
But that being said, of course, cuts are likely coming when you look at where pricing is at the moment. So, yeah, the Feds and some of the chips, unless NVIDIA, of course, gives us a blowout number.
And I'm sure the questions are being quite pointed in this press conference with Jay Powell this time around. Yes, how how confident are you that there is going to be some more signal of a September cut? And the whole cooling of the labor market, I mean, how concerned is the Fed around that now? Because they did mention it is a bit more of a mandate for them now. It's not just about fighting inflation anymore. That slowness that you're seeing in the labor market is quite key for them. And they mentioned about this, unexpected weakening of the economy, right? Whether a Fed cut is necessary or something that they want to do. And what would actually constitute as an unexpected weakening? Right now too.
Yeah, and if there was unexpected weakening, I mean, you gotta wonder how that came out of nowhere with us watching the data and every bit of it very, very closely, almost like a hawk.
Yeah.
But yeah, to Yvonne's point, right, this rotation that started after the last inflation print in the United States. That takes us into the here and now. Asia's doing well. China's doing very well today. Hang Seng Tech Index, Shanghai Comp, CSI 300 all seeing a decent rally today. As you can see, HS Tech 2.5%. Consumer names are very much in focus today. Politburo meeting, and it seems to be more clarity on the priority of boosting confidence. And as you can see, we talked about Prada and earnings, and some of the appliance makers are seeing substantial gains today. And of course, we're standing by for the BOJ as well.
Yeah, I mean, Mark Cranfield from MLive is saying there's maybe signs of some ETF buying from the home team, just given some of the contracts they've seen right now. But you take a look when it comes to dollar yen, there you go. It's still the key thing to watch in the next hour or two or three. Because after the NHK report talking, yes, they might discuss actually raising rates in this meeting. We certainly have seen markets on edge.